Coming up on Market to Market, the head of U.S. Trade is called to Capitol Hill to answer questions about tariffs, along with producer and consumer prices. One egg producer is expanding his supply chain, one small farm at a time. And commodity market analysis with Dan Hueber next.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, April 24 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Higher prices at the gas pump may have one good side. It likely led to the biggest gain for retail sales in 3 years. The monthly reading added 1.7% in March. The surge in sales was driven by the 15.5% escalation of prices at the pump brought on by the war with Iran. An increase in inflation is also part of that equation and is on the minds of many in Congress. A hearing this week called by the committee charged with tax policy, trade agreements, and tariffs focused on those three items with the president's point person on those topics. David Miller reports on the House Ways and Means Committee and the testimony from the U.S. Trade Representative.
That may be favorable
U.S. Trade Ambassador Jamieson Greer spent several hours fielding questions from members of the House Ways and Means Committee. Much of the discussion focused on tariffs.
Keep you out of our markets. So with the president going to China, what do you think? What's the agenda? How can we protect U.S. markets?
I think everyone knows that no one has been more clear-eyed on the challenge posed by China, the economic challenge and national security challenge, than President Trump. This is why he put tariffs on China in the first term, including on Chinese automobiles. It's why he pioneered rules on information and communication technology to make sure that vehicles that have that there was a regime so the vehicles that have technology from China in them can't be used in the United States.
American families are struggling under the administration's trade agenda. Gas prices have gone through the roof, fertilizer has gone through the roof, and all the food that we eat and consume has gotten more expensive and about to get even worse. Mr. Ambassador, can you commit today to let the Section 122 tariffs expire without adding new tariffs?
The president, his trade policy has not changed. He's not going to go back to the old situation where we had no tariffs and we just let foreign goods made by foreign workers come in without any fee to the detriment of domestic workers. I know that Democrat attorneys general and Democrats here, they want to have that system. They want to have a system where there's no tariffs and all this stuff just comes in. But we're not going to have that, so the president will continue to have tariffs using appropriate legal tools.
Farm economy is in a very, very bad place, including with the rise in fertilizer prices. What more is the administration considering when it comes to addressing concerns faced by our farmers and ranchers? And is the administration still considering utilizing tariff revenue to provide targeted support for American agriculture?
So we are very aware of the input cost issue, and fertilizer prices skyrocketed under the Biden administration. But they still haven't come down enough in our view, and I think we probably all share that view. Under the Biden administration, there was an initiative started to allocate money to smaller fertilizer producers. That was never acted upon. The USDA is now actively going through applicants to that program.
Prices are lower, really, because as a working mom who grocery shops every week, I have seen prices go up and up and up. And you can try to spin it any way you want, but I think consumers unanimously agree that President Trump has failed on his promise to bring down costs. They were forced to pay more than $165 billion for Trump's illegal tariffs that the court struck down. Do you think the American people who have been paying higher prices because of these illegal tariffs deserve to be paid back too?
I reject the premise of this. When you look at things like eggs, it's gone down by 45%, smartphones down by 14%.
That's not the question that I asked. The question that I asked is, do you think the American people who've been paying higher prices because of the illegal tariffs should be paid back also?
Ms. Sanchez.
Simple yes or no.
They haven't been paying higher prices because of these tariffs. Wages
For Market to Market,
outpaced inflation.
I'm David Miller.
I have limited time.
For nearly 6 decades, the consumer movement to know where your food comes from has been expanding. This can create a gap between what consumers want and the availability of products. On the other side of the equation are producers looking to satisfy those specific needs with a chance at adding to their bottom lines. One poultry farmer took the consumer search for pasture-raised eggs and turned the idea into a billion-dollar business. Here's Peter Tubbs with our cover story.
A flock of Highland brown hens search for bugs on a farm in southern Missouri. Access to pasture and forest qualifies these hens as pasture-raised. But managing poultry was a new venture for this farm.
Vital Farms projections, they give us projections on new growers, and it was just something that we thought would diversify us even more, because it's not if, it's when. There's going to be ups and downs.
Pace also runs a cow-calf operation with his parents. Experience with livestock made adding 20,000 hens a natural fit in 2019.
When we did first one, people looked at us like we were crazy. It's kind of not normal for Howe County, Missouri. Usually you do what Grandpa did and you do what Dad did, and that's how it goes, but, you know, kind of a step of faith.
Vital Farms has been selling specialty eggs since 2007. The firm has been steadily increasing the number of farms it partners with as demand for its eggs has grown. Much of the demand comes from the company's uncommon model.
We have a very unique proposition within the egg community. We are an opportunity for farmers to own and operate independently. We're a buy-sell model where farmers have an opportunity to manage and operate independently. We sell them our chicks, they own those chicks, and then we buy the eggs from them. We are there to coach, mentor, help from the moment they receive those chicks to the moment those chicks go out of production. Along that journey, for the 80 weeks in which they are operating that farm, we're there by their side to make sure that they can be as successful as possible.
The primary attraction for consumers is that Vital Farms eggs are pasture-raised. The hens are cage-free and can leave the barn during most of the day, returning to their roosts in the barn at dusk. Each barn is surrounded by a series of paddocks, which are rotated every 21 days.
We believe very rigorously in a high definition and high standard of animal welfare. That is the differentiator for the Vital Farms brand, and what differentiates us from any other egg brand in the marketplace, to be quite honest with you. You might believe that eggs are eggs. Some people believe that eggs are a commodity. We beg to differ.
From a grower standpoint, the primary difference from commodity eggs is the lack of a tournament model, where farmers compete against other farmers, and the lowest performing farms find their contracts canceled.
We'll provide the support regardless of how that farm is producing. Now, we were going to do anything that we can to support that farm to ensure that their farm is as productive as possible.
Producers working with Vital Farms commit 25 acres of paddock for the hens, and each farm is limited to 2 barns, or 40,000 layers. Vital Farms sources its eggs from what it describes as the pasture belt, where grass can be grown year-round, a region from eastern Oklahoma and Kansas through Tennessee, Kentucky, and southern Ohio. Vital Farms has seen dramatic growth over the last 5 years.
When I came here, I think we were a $100 million brand. By the end of this year, will be a $1 billion brand in 5 years' time. You don't have an opportunity to do that very often.
The tenfold growth in sales required expanding from 200 farms in 8 states to over 600 farms in 9 states. Processing and packaging of Vital Farms eggs occurs at Egg Central Station in Springfield, Missouri. After an expansion that included a 3rd processing line, 5 million eggs pass through the facility daily, nearly double the throughput from 2024.
So as we brought on new farms, partners with more farm families, we also at the same time intentionally grew the capacity here at the plant. But we knew we had to gain an exponential number, right? We needed to get 30, 40, 50%. So we took down a portion of the plant that was coolers, and we dedicated that to a third line. Let us double our overall capacity through the course of the year.
A second processing plant is under construction in Indiana, which will allow eggs to be sourced from the eastern part of the grazing belt. In an industry that strives to reduce its supplier count, Vital Farms views dispersed sources of eggs as an advantage.
We partner with 600 family farms, and critically, where those family farms are located is also important. If there's a terrible storm in one state, you got farmers all over the other states. Bird flu breakout, whatever it might be, it's not a bunch of chickens in one building. They're spread out across all these states, across all these farms, out on pasture.
Each carton of eggs can be traced back to the farm where the eggs were laid. Vital Farms is one of the largest certified B Corps in the food industry, which requires meeting social and environmental performance standards. The commitment to small farms and pasture-raised hens is part of Vital's marketing strategy. As a growing swath of Americans put more focus on how their food is sourced, specialty eggs become more attractive and justify their premium prices. Specialty eggs can be a profit center for retailers, becoming more valuable than commodity eggs, which are often sold at a discount to drive foot traffic. The rapid growth in demand for Vital Farms eggs has created a new revenue stream for hundreds of small family farms. Pace has broken ground on his second barn.
Whenever we first started with Vital, they ran on happy hens. And at first I thought, yeah, okay. But truthfully, seeing them out here scratching in the pasture, you know, just living where they naturally want to live is pretty satisfying.
From Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Dry conditions' influence on the trade yielded to forecasts of rain late week. For the week ending April 24, the nearby wheat contract added 18 cents, and the July corn contract gained 6 cents. Beans continued their double-sided trade in the soy complex. The July soybean contract fell a nickel, while July meal was off $8.10 on the week. July cotton shrank by 48 cents per hundredweight. May Class 3 milk futures added 57 cents. The livestock market was lower as June cattle cut $2.27, August feeders declined $4.15, and the June lean hog contract weakened by $1.78. In the currency markets, the U.S. dollar index put on 62 ticks. June crude oil added 15% or $12.32 per barrel. COMEX gold fell $146.50 per ounce. And the Goldman Sachs Commodity Index was up by more than 3 points to settle at 731.12. Here now to lend us his insight on these and other trends is regular market analyst Dan Hueber. Hello, sir.
Hello, how are you?
Wonderful.
Very good.
Let's talk wheat.
Okay.
Because it's a bright spot. A couple of reasons. Mm-hmm. What are the two for you that are the biggest?
Well, of course, reduced acreage once again, but then the dry weather in the southern plains that has stimulated. So, and truly, it's the only market out there that has a weather story at this point in time. You know, how long that continues on, we shall see. But it has been the bright spot in the grain soy sector here, really since the first of the year. But most specifically over the last couple of weeks here. So.
Well, there's some who think it hasn't responded enough, including those of you who submitted questions. So let's start, if we could, with Roger in Nebraska, who's in that area where this is a everyday question. Sure. When will the Board of Trade finally pay attention to the severe drought in the southeast and middle sections of this country?
And again, I would say they have paid attention. Granted, it's not a wild type of situation, but keep in perspective as well that we're not looking at any kind of a tightness necessarily in wheat. Yes, the hard red maybe could be a little tighter situation, but when you look at wheat as a whole, globally, domestically, we're not looking at a cringe situation. So now, is there a possibility we could see Kansas City wheat maybe pushed to the $7 mark? I think that's a real threat if we don't see the weather change here in the near term. But here again, too, wheat is available. In fact, I read today that we were importing some wheat at this point because worldwide wheat is significantly cheaper than domestic wheat. So, that's going to be that tempering effect that caps out markets.
Is this a time for action?
Oh, I think so. I think, and again, we'll I know we'll cover more than wheat here, but absolutely. I think all supply markets, all supply rallies, I should say, tend to be short-lived by nature because they are driven by weather, by a one-off type of situation. And, if you don't reward them, you tend to regret it later. So, yes, I think anything from here on up, you want to be rewarding. So.
All right, so that's wheat. How about let's talk old crop corn? Is there a reward to be had here?
Well, we've had a little bit of a bounce the last couple of weeks, pretty anemic. Corn demand has not really been bad. We continue to post pretty respectable export sales. But, that said, if we don't do it now, when are we going to do it? So it's, yes, old crop corn, it's going to be difficult to think we're going to get carried away. If we can make it up, we've in the last week retraced about half of what we lost since the March peak. We may be able to could extend it just a bit more than here, but I think it's going to be a challenge to really take that much higher without getting concerns about what's going on with the new crop.
Well, we're putting in that new crop.
Correct.
We're a little distracted with that. We're watching the weather.
Sure.
So what is it going to take as a headline on that old crop to maybe pry some more of this loose?
Well, and I think we'd probably have to see the rains really continue and push planting further back to where we start talking about losing acreage. There is, again, the whole war in Iran situation has, as we painfully know in the farm sector, really boosted not only fuel prices, but of course fertilizer prices. I think the market's trying to factor that in right now. Do we need to be building in a risk premium if people use less fertilizer? Are we going to be able to maintain trendline yields? Those kind of questions. Nobody can provide the actual answer to that, of course, at this point in time. But that said, I think that is the one point you could look at and say, well, there's potential for that. So.
Well, it's interesting you say it on the old crop side because there's a thought that Iran's going to be more of an influence on the new crop side.
Sure. Well, but I mean, once that does happen, people will tend to grab what they can.
I see.
So not that it's going to be the driving force taking old crop higher, but if you really get concerns about the new crop, that we may not have as many bushels available there, people will tend to do a little hoarding, maybe buy some stocks right now to make sure I have inventory for later on.
Are we to the point yet where we have seen acres change because of fertilizer situations?
Certainly a possibility. And again, I have not really heard much discussion of that just yet. And of course, again, unless somebody is forced to change, a lot of seed is booked. Probably, hopefully a lot of fertilizers have been booked. But if not, I think it's going to be pushing it right to the end before you see a change. And again, I think it's probably going to be more weather-related than price-related at this point, particularly when you consider that the soybean prices are not exactly stellar, or at least the action in the soybean market is not exactly stellar at this point.
Well, the action's been, I think what you called earlier this week, very much, it's been range. We've been stuck at like a 55-day average, not breaking out, except yesterday we did break out lower.
Right.
So what does that say?
Not all the way out of the range, but I think it's kind of taking to the edge, saying that, boy, if we don't come back with a better bull story, or if the story really starts turn into rally, that yes, it looks like we're going to see more bean acres in the ground, boy, it would be tough to hold soybeans at least at current levels. Demand-wise, boy, it's non-existent here at this point. China bought their initial rounds after the first of the year. Certainly our March shipments to China were better than a year ago, but they still weren't good. So we're quite a ways behind the eight ball in that soybean market.
Oh, and then that South America situation too. They keep growing lots of grain. Are they as big as? I mean, they're almost done with this first crop.
Soybean harvest is almost complete.
So that means any premium or challenge is likely out of the market too?
Oh, certainly. Yeah, I mean, and again, it'd only be a transportation issue at this point, but at this point in time, South America is going to own that nearby soybean market. So,
is there anything that a producer should do right now, given there's a lot in the market, there's not a lot of activity or excitement in soybeans?
Sure. Hopefully they've already taken advantage of the rallies we had post January 1. But, right now I'd say if you're sitting on extra beans, you either ought to have a put on there or be ready to pull the trigger if this market starts tipping lower from here. So it's, and here again too, upside, even if we can talk about new crop a little bit, we've nearly pushed $12 beans at the highs back in March. We're a bit below there at this point in time, but even if there was an explosion to the upside, 50 cents more, we're not talking about dollars and dollars of rally ahead of us here.
Right. I was going to ask you about this $12 number. Is it a mental or a technical?
A combination of both, but I mean, certainly psychologically, $12 is interesting. When I look at the November situation, a year ago in January, we gapped below $12.50, and we've never revisited that mark since. And I think, like I said, even if there was a weather scare or something, or we had some other bullish factor that came into the soybean market, $12.50 is probably going to cap it off. So I mean, you're really not talking about even a 10% rally from where we stand. That's more like a 5% rally from where we stand. So it's not like there's great upside potential here.
That sounds like focus on the planting, not worry about the marketing of beans right now.
Well, here again, then don't just leave it out there. I think you have to be sold ahead on this. If you think you need to have some weather protection, do it with calls. It's why leave too much risk out there to the downside.
Cotton started well, finished last week well, continued early this week, and now the last couple of days we've sold off. What's going on there?
Again, it's been a huge rally since the beginning of the year. Granted, dryness in the South, of course, just like impacting wheat, has been impacting the cotton market. The exception there, though, is we are looking at probably a little higher acreage this year. So I think at this point in time, you've probably squeezed all you can out of the weather concern rally. So we'd have to find something new to try to think prices can move higher than this.
Is there a squeeze going on in the live cattle market right now?
Oh, I don't know if he'd say squeeze per se. I mean, we really did take a pretty good washout here over the last few weeks, trying to build that back up here once again. I think this will be the true test. I mean, if we can't sustain this rally beyond next week, then I think we're probably looking at some pretty major tops on the cattle market. But I mean, we've been saying that for a year and a half.
But this is as close as we've had to signals, right?
Exactly.
So then what does that mean?
Well, I think one, we're probably have deferred enough demand, or should say discouraged enough demand that it's making an impact. We know we're trying to do, I should say that the U.S. is importing beef to uninhibited here at this point in time. So, I think there's been a lot of effort to try to put a cap on food prices, and I think beef is the number one culprit that everybody's after at this point in time. Have you been impressed or disappointed in boxed beef here lately? Well, Good question. Neither. I think it's just normal trade.
Yeah.
So
Which means we're likely going to, no matter how much you import, we're going to probably be stuck at a certain price level.
Right, for the time being, right.
Feeder-wise, after last week's cattle on feed report, there was this thought that, here we go, we're opening up the door.
Sure.
We dropped, but we stabilized at the end of the week. Why? Is it about retention? Is it about exhaustion?
I would say it's also about an anemic corn trade, to where it not as much fear about what prices are going to be on the input side of it. So, but I think that with the cattle market itself kind of teetering on the edge of a major question, do we have a high in place here? I think that could evaporate the premiums in the feeder market pretty rapidly. So,
hog market though, maybe a bottom. The bottom is in?
Right. I mean, we've had a very solid push to the downside, bounced away from those lows earlier this week, and then we finished a bit weaker today, but didn't go to new lows. So I think there's a better than 50-50 odds that we have a low in here. We'll see more of a seasonal climb up into the summer months again.
Is there a certain driver on this?
Oh, other than normal summer demand, I wouldn't say a major driver at this point in time. So.
Because there's no trade story. I mean, every once in a while we hear about this summit that could happen between the U.S. and China in May. Soybeans is the headline in that. Pork doesn't seem to be a part of that discussion anymore.
No. And again, when you look at pork exports have been reasonable this year, but, China themselves, granted they can tell us a lot of things if they follow through or not, but I mean, China has a 10-year goal to really trim back on meat imports. And, and again,
Well, trim back on a lot of imports.
Imports, period. Correct.
Yeah.
Correct. I mean, again, we all have a stated goal, I guess, of expanding production year after year. You're limited by geography, certainly over there, but the technological advances we continue to see in production, particularly in crop production, could be their ace in the hole there too. So.
Well, it's good to have you here as our ace in the hole. We always appreciate it.
Wow, ace in the hole. But always a pleasure to be here, certainly.
Good to have you, Dan. Thank you much.
You bet, thanks.
Dan Hueber, everyone, on our market analysis segment. That's what you've been watching here on this program. In a moment, Dan and I will continue our discussion in that online-only segment. We call it Market Plus. So here's how you find it. You search Market Plus with Dan Hueber wherever that you get your podcasts. You can also go to our website of markettomarket.org to listen. Thank you to those of you who've joined our Facebook club by liking or following our page. Come see our posts of photos, links, and questions to keep you in the loop with this program. Join us at facebook.com/market-to-market-show. Next week, what a thinner winter snowpack means for producers out west. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.